Welcome to the Capital News. I am your host, Alex Karitis. Today is Wednesday, December 30th, 2020. Thank you so much for joining me. It is New Year's Eve. Title of today's podcast is Here Comes 2021. Going to keep this podcast a little shorter than usual, I do believe. Probably going to take the next 2 days off, but perhaps not. Obviously, it's going to depend on what type of news breaks. So we'll see what happens, but New Year's Day, most likely, for certain. So last week, or earlier this week, I should say, I mentioned that the Department of Labor might release initial jobless claims today. I wasn't certain. I didn't look at the calendar. Perhaps that number is going to come out on its typical Thursday release, so tomorrow. So we'll see what happens there. Hopefully, it's not another heartbreaking figure, although I imagine it's going to be. And 800 some thousand, 700 some thousand, anything like that is heartbreaking and is still well above the depths of where we were during the great financial crisis. And this just continues to happen on a weekly basis. But nonetheless, the Department of Labor did put out a news release today. And I want to take the time to read this. It's relatively brief, but it's an update as to the Nobody Cares Act 2.0, the thing that the president just signed into law. So we're going to talk about that a little bit. I want to have a little bit of a deeper discussion with respect to the dollar index, because there's a lot of people on Twitter and some of the media that I'm watching that are talking about, oh, this is the dollar's demise, the sky is falling, it's going to crash, Okay, we're going to get to that, and then obviously market performance, and that's going to be it. Easy peasy, right? So here is the news release from the Department of Labor. So the U.S. Department of Labor's Employment and Training Administration has issued guidance that provides overarching implementation information about unemployment insurance provisions contained in the Continued Assistance for Unemployed Workers Act of 2020, which is part of the Consolidated Appropriations Act 2021, also known as the Nobody Cares Act 2.0. On December 27th, 2020, President Trump signed into law the Consolidated Appropriations Act 2021. The guidance provides states with important information about several provisions of the law, including the extensions of programs first authorized by the Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act or the Nobody Cares Act, earlier this year, as well as the creation of a new UI benefit for, quote, mixed earners. The law extends the Pandemic Unemployment Assistance PUA program created by the Nobody Cares Act, which provides UI benefits to gig workers and others not traditionally eligible for them. Under the law, the end of the period of applicability for the PUA program extends to those weeks of unemployment ending on or before March 14th, 2021. So that's going to take us, as we've been stating, through the first quarter of 2021. In states where the week of unemployment ends on a Sunday, the last payable week of PUA is the week ending March 14th, 2021, March 13th if weeks of unemployment end on a Saturday. They should know this. Can they not look at a calendar? For individuals on PUA who have not exhausted their benefit eligibility of up to 50 weeks, the program also provides for continuing benefits for eligible individuals for weeks of unemployment through April 5th of next year. The law also strengthens documentation requirements to ensure PUA program integrity. Strengthens documentation. That tells you that there was a lot of fraud in the first one. Additionally, the Federal Pandemic Unemployment Compensation Program, FPUC, I'll hold my tongue, I wanted to say something, which expired July 31st, 2020, is reauthorized and modified to provide $300 per week to supplement benefits for weeks of unemployment beginning after December 26th, 2020, and ending on or before March 14th of 2021. FPUC is not payable with respect to any week during the gap in applicability. That is, weeks of unemployment ending after July 31st, 2020, through weeks of unemployment ending on or before December 26, 2020. So just a lot of administrative stuff, but just sort of giving you a high-level overview as to what's coming down the pike. And then here's a quote from one of the Assistant Secretaries of Labor. Here we have, as we enter a new year, thanks to the President's actions, states will be able to offer vital assistance to Americans struggling. The Department, as it swiftly did after the passage of the Nobody Cares Act in March, will work with states throughout the duration of the pandemic and offer them the resources and dedicated assistance they need to implement the new and extended unemployment provisions of the law. What a nice guy. What a nice guy, isn't he? The department anticipates releasing further program-specific unemployment insurance program letters to states that will provide in further detail legal and programmatic guidance on certain provisions of the law, including extended benefits, federal pandemic unemployment compensation, PUA, PEUC, merit staffing flexibilities, mixed earners unemployment compensation, and funding to address fraud. So there you have it. There is their news release right on their home website, dol.gov. Link is readily available there. Just giving an update to Nobody Cares Act 2.0 and what's going to happen over the next few months. So obviously, for those who are struggling, this is definitely better than nothing, right? Of course, I'm against all of these bailouts, but I guess if they're going to do them, if they're going to give our money away, I'd rather it go to people who actually need it as opposed to a whole bunch of corporations, foreign entities, foreign countries, foreign corporations. But, you know, that's a part of this bill, too. Okay? That's part of the Nobody Cares Act 2.0. Whether you want to put that and lump it into the $900 billion monstrosity or the $1.4 trillion monstrosity, $2.3 trillion in total, and maybe it's going to go higher if the $600 checks turn into $2,000 checks. And maybe more. Who knows what they're going to come up with? There will be Nobody Cares Act 3.0 and 4.0, maybe 5.0. Who knows? More spending is never enough, as we stated the other day, right? So that's it from the Department of Labor. We'll see what happens tomorrow with respect to initial jobless claims, but it's likely to trend where it has been over the past several weeks. But let's hope it is at least south of 800,000 because that's where it's been for the past few. So we'll see. Now, market performance. Dollar index is trading at 89.60. 89.60, so some further weakness with respect to the dollar index. Not a lot of movement on any of the major currency pairs, although the Australian dollar against the U.S. dollar is strengthening by 0.2%, trading at 77 cents to the dollar, which is a multi-month high, which seems to be the case with many of the major pairs because there is a lot of dollar weakness going on. And, of course, we're going to come back to the dollar a little bit here shortly. Overnight futures trading, we have the Dow Jones Industrial Average down about 0.1%. The S&P 500 is flat. NASDAQ 100 is currently in the green, up about 0.25%. A down day in Japan. Also a sea of red across the pond in Europe. And the Australian markets gave back 1.4% today. Nonetheless, the Chinese yuan is trading at a fresh 30-month high. And Chinese stocks are also hitting a 34-month high. They're printing a lot of money over there too, folks. Smoke and mirrors. That's all it is. WTI is currently trading at $48.27 a barrel. Brent at $51.51. Natural gas, $2.49. Gold is currently flat right now, $1,893 an ounce. Silver is down 0.33%, trading at $26.50 per ounce. Rounding it out, Uncle Sam's 10-year junk note is yielding 0.93%. So, the dollar index, right? A lot of people were screaming, the sky is falling, the sky is falling. It's the end of the dollar. This is going to be a dollar crash. Maybe they're right. Maybe they're right. I still think that there is the possibility that the dollar can have its swan song and do a big reversal. A lot of people are also making that argument, too, that this is going to be one of the largest short squeezes ever because So many people are on only one side of the boat. Everybody is selling the dollar. Therefore, people think, well, that's going to unravel and there's going to be a huge spike to the upside. That could happen. But just because everybody's on one side of the boat doesn't mean that it has to happen anytime soon, if at all. I mean, with what the government is doing, with what the central bank, the Federal Reserve is doing, they're doing a fantastic job of making sure that the dollar continues to go down. But that doesn't mean that that's going to necessarily be the case. Net, over time, yes, it is going to go down. It is going to collapse. I believe the U.S. dollar will lose its reserve status. That's going to take some time, but I believe that's its ultimate fate. I think that's what's going to take place. But as I have been stating, at these current levels, with an 89 handle, that to me is not giving me a lot of concern to say this is it. This is the demise of the dollar. This is the sky is falling. This is the crash finally coming here. I don't believe that as of right now. The levels that I've stated that we have to look for is an 87 handle, and if we plunge through that, then it's something to start getting a little bit more concerned about. Because, look, where were we in 2014? We were trading at a 79 handle in 2014. And the sky wasn't falling. The world wasn't on fire then. It might be this year. It might be next year. So those are things to take into consideration. But just from a number standpoint, if you will, as to where the dollar index was trading with the 79 handle 6 years ago. We're all still here. Everything's still okay. Things are functioning, not as well as they should be, not anywhere near it. But you get my point. This wasn't a collapse. Now, we might not have to get that low for it to be a bigger problem because the amount of debt that we now have across the board, across the spectrum, the budget deficits, the national debt, and our trading deficits, which are going in the wrong direction. Deficits are getting bigger. Those are our twin deficits, the budget deficit and the trading deficit, which also goes to put a lot of downward pressure on the U.S. dollar. Now, if you want a little bit of a history lesson with what I'm looking at right now, the dollar index going back to the 1970s, you had the dollar index peak in, let's see, what year is this year? 1985, 1984? Yeah, 1985. You're at 160. 160. Now, of course, right now, the dollar index is heavily weighted against the euro. And, of course, back in the early 80s, the euro wasn't around, so it was against another basket of currencies, but nonetheless, that's where it was trading, up at 160. And then over the next several years, it plummeted below 80. Then it rallied once again through the dot-com era, getting to about 120. And then during the great financial crisis, we were trading at a 72 handle. All right? So the interesting thing to look at is not just the 72 handle, where it was actually trading 84, whatever the number was. But what was also the financial and fiscal status of the United States of America at that time? Well, if you go back, as we have been stating here for the past couple of weeks with respect to the national debt, if you just go back to 2008, $9.5, $10 trillion national debt, we've more than doubled that. We're almost triple that. So that's why these levels are getting to be of concern, because we are in such worse shape financially speaking today compared to where we were even in the depths of the great financial crisis. We might not have to go back to that 72 handle for it to really cause a big problem. Maybe it is my number of 87. If we bust through that, that could be all she wrote. Time will tell. I mean, it's a race to the bottom. All of these other countries are doing the same thing. The ECB is doing the same thing. It's a currency war. You say, well, why isn't the euro a lot weaker? Why is the Aussie appreciating like it has been? The RBA, the Reserve Bank of Australia, they're all doing the same thing. Why is it the dollar that's really getting beat up? And that's a legitimate question. But I just think it comes to the amount of debt that is going to be put on the books. In totality, and as a percentage of GDP. Our debt is growing much faster than is our economy. That is completely unsustainable. That's what we're going to continue to do. It's a joke. Like I said yesterday, Sleepy Joe doesn't know what he's doing. Kamala doesn't know what she's doing. Crazy Nancy, Chuck Schumer, Mitch McConnell. These people don't know what they're doing. It's almost as if they go, well, we've been here for 40 years, and this is what we've done. There's a problem. It's like they're sitting around the table at home and say, honey, I think I solved it. Oh, yeah, what are you going to do? The same thing that I've been doing for the past 40 years. I think this time it's going to work. And of course, it doesn't, and it's not going to. But that's what they're going to do. It's going to be the same shenanigans, and we're going to continue to pay the price of it. 2008, $10 trillion national debt. Unbelievable. We're going to triple that, of course. We're going to be triple that by the end of next year. Even where you have to look at the dollar index in 2014, which again, trading at about, the low of it, 75, 74. 2014, where were we with our national debt there? 17 trillion? We've added 50%. Nearly 50% by next year. I don't want to pay for this stuff. I just don't want to do it. I don't want to pay for it. I don't know. Maybe I should write my own Declaration of Independence from the government. I want to stay in the country, but maybe I should declare my independence from the U.S. government. I mean, it's just getting out of hand. I don't authorize this stuff. Why are we paying to support other people's militaries? Why are we giving a whole bunch of our hard-earned tax-paying dollars to a whole bunch of dictators and fraudsters in other countries? Doesn't make any sense to me. Why are we bailing out major corporations, the largest in the world? They don't have a cash flow problem. They don't have a problem going to a bank and getting money. They don't have a problem going out to investors and getting money. Why are they going to Uncle Sam? I don't like it. I don't authorize this stuff. As I stated back in March, in my letter to my congressmen and senators, representation and recourse, where is it? Where's my representation and what recourse do I have? I have no representation. I have no recourse. That's where we are. The end of 2020. And isn't it amazing that it's already the end of this crazy year? When you think back, I remember talking about the impeachment trials, which were back in January. Like it was yesterday. The Australian bushfires. Back in January. Something at the time, we didn't know really what, right? Something was going on big in China. I said, well, they're shutting down. I said, I don't know what's going on really, but something to be paying attention to, because China's not just going to shut down for nothing. And of course, all the statistics that come out with respect to their COVID-19 figures are bogus. It's a joke, okay? You might have been born at night, but not last night. Please do not believe the Chinese. It's all smoke and mirrors. This is economic warfare. It's all that's going on. Keep people's stock markets up. That's it. Inflate figures that make them look better, or deflate other ones. Whatever's going to make the statistic look and sound better, that's what governments are going to do. Especially the major ones. Especially the United States, especially China. Make no mistake about it, this is economic warfare that's going on. And I'm sure there's a lot of things going on behind the scenes that we will never hear about. What a crazy year, and it is really hard to believe as I sit here and am talking right now that it's the end of 2020. And, those of you who have been with me, you know my predictions for next year, at least with respect to the economy. I think it's going to be worse. I hate saying that. I hope I am 100% wrong, but I really don't see anything changing structurally, and that's what needs to happen. There needs to be structural changes. And even if that happens, there's still going to be a lot of pain within the system because there's just so much waste and distortions and malinvestments that is just continuing to make its way through the system. There is no easy fix here. But at least you can really start to rebuild. You can build on a solid foundation. All we have done through the Nobody Cares Act and everything else that has been passed, these several $1 trillion, basically created out of thin air, has done nothing to structurally repair the foundation of our country, politically and economically. It's done nothing. In fact, it's made it a lot worse. It's just sort of braced it. That's all. It's just bracing it, making sure it doesn't really totally collapse. But that's what we're headed for if we don't structurally solve these problems, and nobody is talking about them. It's not the time to do it. You know, Jay Powell at the Federal Reserve, well, we're not even thinking about raising interest rates. And earlier this year, they were talking about, you know, we got to get our fiscal house in order, and the debt is unsustainable. Now, all of a sudden, now we don't have to worry about the debt. Now is not the time to concern ourselves with it, even though it's exponentially growing. We don't have to concern ourselves with it. And just wait till Dingbat gets sworn into office. Janet Yellen is the Treasury Secretary. This is going to be a 1-2 punch, and we're going to get knocked out. So that might be what the dollar index is also seeing. It's going to be a 1-2 punch because it's just going to be the Federal Reserve and the Treasury, one hand washing the other, which is what they've been doing for years. But now, you know, as I've been saying, it's on hyperdrive, overdrive. I think they're going to find another gear, which is hard to believe, but I do believe that's going to happen. And if the Democrats should win the majority of the Senate, then I think there's no doubt about it. Because they're going to have the votes. They're going to have the White House. They're going to have the House. They're going to have the Senate. And if they think the American people need another 2,000, another 4,000, they'll do it. They'll pass it. It's crazy. It's crazy. But at the end of all of this, I really just want to wish everybody a happy new year, especially, of course, if I don't do a podcast tomorrow on New Year's Eve. But have a very safe and blessed happy new year. I hope everybody is safe and healthy. And, you know, just take it day by day. Hopefully next year is better. Hopefully I'm 100% wrong that the economy is not going to be worse next year, or even close to what we experienced this year. I really mean that because it affects so many people. But do your best to enjoy the holiday, these last couple of days of 2020 with friends and family if you can, FaceTime, Zoom, whatever. If you want to socially distance, do what you got to do, but, you know, be a little bit social there. It's always good to see friends and family one way or the other. So I just want to thank everybody for another year, growing the audience little by little, and I really enjoy doing these as often as I can, and I truly appreciate your support and everybody's comments, and hopefully we can get a little bit more of a conversation going back with the audience, a little more frequency here with some comments. I would appreciate some questions, anything, just to challenge me, to challenge you, and to really make this a little bit more of a pleasurable podcast for everybody, because I do this for myself. Make no mistake about that. This is sort of my therapy session, if you will, with just how crazy everything is, to at least express some of it, get some of these things off of my chest. But it's also for you guys. So I hope I'm doing a good job. Hope I'm performing a service. Hopefully I'm doing my part in educating the audience on some things that you might be interested in or struggle to understand, and hopefully I do a good job at doing that. And if I'm not, then, you know, hey, constructive criticism, I welcome it all the time. Just send a note, and I'll do my best to clarify something if you don't fully understand it. So with that, Happy New Year. And most likely I'll catch you guys in 2021. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.